Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Stagwell Inc. This one's about approving more company stock, which might sound like a yawn, but trust me, it can actually affect your investments. Kind of like when someone brings an extra large pizza to a party and suddenly everyone's portion gets smaller. First of all, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these filings with investors like yourself. So here's the deal. Stagwell, that's the company we will talk about in this video, just held its annual meeting about a month ago. There they voted on a few important things, especially a plan to increase the number of available company shares. Let's find out what that means. First, let's establish the basics. This is an 8K filing, which is basically a heads-up report companies file to let investors know about big events. In Stagwell's case, this report is about what happened at their annual meeting on June 12, 2025. One of the biggest items on the agenda was about the Stagwell Inc. third amended and restated 2016 stock incentive plan. Think of this plan as a reward system for employees where they can get company stock. This time they wanted to add a lot more shares to the pot. So stockholders voted to approve the increase of the stock incentive plan. Before the change, there were about approximately 20 million shares. Now there could be about 40 million shares, meaning approximately 20 million new shares were added to the plan. The board of directors okayed this plan back in April, but it needed the stockholders to say yes to. Now, here's where it gets interesting. Stockholders got to elect directors. These are the people who are in charge of making the big decisions for Stagwell. All the nominees got the thumbs up, like Charlene Barshevsky, Bradley Gross, and others, till the last one, Brand Vaughn. They'll be holding their positions until the next annual meeting in 2026. Remember that stock incentive plan we talked about? Proposal 2 was if the shareholders approved the proposed changes. Well, the majority voted for approximately 245 million voting for the proposal, against approximately 4 million voting against the proposal. So the plan is a go. A lot of employees will be thankful. But what does it mean for everyone else? Moving on, the stockholders had their say on executive compensation. This is basically a vote on whether they think the top managers are getting paid fairly. The final count was approximately 244 million voting yes and approximately 5 million voting no, which shows most people think executives are being paid fairly. But keep in mind, this vote is advisory, a non-binding advice. Lastly, the stockholders ratified the appointment of PricewaterhouseCoopers LE Company's independent accounting firm for the year ending December 31, 2026 million votes. Now, here's my take on all of this. Remember, this is only an opinion based on the numbers above. These plans can be great for employees, giving them a stake in the company's success. The downside, when there are more shares floating around, each share represents a smaller piece of the pie. This could potentially dilute the value of existing shares. In other words, all else being equal, your shares are now a bit less valuable. Stagwell, overall, it shows that employees are taken care when you have these kinds of compensation plans in place. Plus, everyone seems to agree on who's running the show and who's watching the books. Of course, there's always risk. The biggest risk might not be a financial one, but just investor confidence that can affect how the stock performs, regardless of sales or profit. To strap it up, this was an overview of this 8K form. We reviewed all the high-level proposals, an overview of this 8K form. We reviewed all the high-level proposals. Alright folks, that's our breakdown of Stagwell's recent moves. What do you think about this decision to add more shares? Is it good for employees, bad for existing investors, or a bit of both? Jump into the comments and let's discuss. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Also, don't forget to check out the Discord channel linked in the description below. Thanks for watching and I'll see you in the next video.